What's up, traders? My name is Layla, and welcome back to this week's no-nonsense market recap from Bullish Bear. Stocks closed out a choppy, headline-heavy week as investors balanced strong earnings with rising political and geopolitical noise. A clear sign that risk aversion is creeping back into the markets. U.S. equities drifted lower into Thursday, setting a more cautious tone. Bond yields eased, the U.S. dollar strengthened, and the global markets followed suit. Asian equities were mixed, and European stocks softened after the ECB held rates steady. Earnings season continues to deliver solid fundamentals, even if stock reactions haven't played along. With roughly 55% of the S&P 500 reported, nearly 80% have beaten expectations, posting an average upside surprise north of 8%. Alphabet became the poster child for this market's mindset. The company crushed revenue and earnings estimates and delivered blockbuster cloud and AI growth. Yet, shares slipped after management laid out plans for heavy AI-driven capital spending through 2026. Advanced micro devices saw a similar reaction, pulling back despite eye-catching year-over-year growth as investors locked in profits after a long rally. Elsewhere, Qualcomm beat but stumbled on guidance. Meanwhile, Amazon loomed large as investors questioned whether AWS can maintain its fastest growth pace in years. On the bright side, Eli Lilly surged after a major earnings beat and strong outlook powered by explosive demand for Manjaro and Zepbound. Elf Beauty, Snap, Palantir, Verizon, Supermicro Computer, and Disney also impressed. All the while, PayPal, Uber, Amgen, Pfizer, and Western Digital reminded investors that beating expectations doesn't always mean higher stock prices. AI remained front and center this week. Alphabet's spending plans reignited the debate over near-term margins versus long-term dominance. Nvidia dipped on reports and later denied questioning its OpenAI partnership. Oracle climbed after projecting up to $50 billion in cash proceeds to fuel cloud expansion, and Anthropic raised the bar with the launch of its new Claude Opus model. Chip stocks stayed volatile throughout the week, pressured by earnings reactions and memory market dynamics, even as long-term demand trends remained constructive. In healthcare, Novo Nordisk slid sharply after warning that competition and pricing pressure could slow growth in 2026. The company escalated tensions by threatening legal action against him and hers over a $49 Wegovy copy. Meanwhile, Eli Lilly continued to widen the gap, reinforcing its leadership in weight loss and diabetes. Macro data painted a resilient but uneven picture. Manufacturing and services activity pointed at continued expansion, jobless claims ticked higher but remained historically low, and mortgage applications fell nearly 9%, reflecting affordability strain. Politics added yet another layer of uncertainty. A partial government shutdown briefly took hold, and the US and India announced a new trade deal. Meanwhile, geopolitical risks flared after President Trump warned Iran's supreme leader to be very worried, reviving concerns around Middle East oil supplies. Outside equities, metals were volatile, with silver plunging before rebounding. Gold managed to edge higher, while Bitcoin extended its slide, falling below $70,000 to levels not seen since 2024. Overall, fundamentals stayed strong, AI investment accelerated, and if investors made anything clear this week, it's that bold spending needs to turn into real profit. The opportunity is still there, but selectivity has never mattered more. For more updates, tune in next week as we continue to track the market's every move, and subscribe down below to Bullish Bear for more market recap videos. Until next time, stay disciplined, manage your risk, and remember, bears make money, bulls make money, but pigs get slaughtered. See you in the trading room.